Welcome to
Well,
office hours for TradersPost for May 3rd, 2024. It's a wonderful day because markets are up for anyone who's bullish, but if you're bearish, I'm so sorry. You picked the wrong horse. I am Tom Hartman here for the TradersPost marketing team, joined with Mike Christensen, CSO, and CEO John Wage. How's it going, folks?
what is
Good.
up?
That's
How's it going, Mike?
Yeah. I mean, if I'm disappointed at all, it's that I only went 10x leverage on Bitcoin at the bottom as opposed to 50x leverage. But hey, that's a problem we all should have.
Our trades always look amazing in hindsight, don't they?
Yeah. Well, what I know for sure is that I won't close the trade in profit. So I have to enjoy this period right now because I'm going to over leverage up and then it'll pull back 0.5% and I'll lose it all, which is fine. It's fine. I can live with that.
At least you've expected, some of the worst case scenarios.
Exactly. All right. So this week, as always, we're going to be going over your questions that you've posted in Discord, that you send in support tickets, and that sort of thing. We want to make sure that TradersPost continues to evolve to become the best automated trading platform for you and your algo trading needs. And to that end, we need your feedback. We need your feedback, and you need to know what we're thinking and how we're developing, which is why we have John here today, who's also going to be giving us a little bit of a sneak peek at some new features that's going to be coming down the pike for TradersPost. I figured to start off, it might be nice to. I feel like we're always. I'm always pulling up the most contentious questions and making it seem like all it is problems that we're solving all day, which is what it is. That's what being a development company is, and that's what being a trader is. But we do have praise as well, and praise should be said when praise is given. So I just wanted to point out something here that a Ventura trader said on Discord the other day. Love your product, by the way, and I want to share it. For someone like me who works a full-time job and doesn't have time to stare at charts all day, TradersPost is perfect. I mean, if we had paid for a review, I'm not sure we can get a review that good. Now, specifically, that was for John. John is in the Discord and he's always answering people, very, very active. But I'm going to piggyback on that and say that that's a win for the team. It's a win for everybody.
For sure. And obviously to level up, it would mean that you've done so well with TradersPost that you can still stare at charts all day and your TradersPost dashboard because you quit your job. Like that's obviously the win.
Exactly. I find it's good to first you quit your job, then you can stare at charts all day, then you make the money. That's the path that you should go.
I feel like there's an order out of sort there.
Next up, we have the automator who says, also, I would like to thank you for blazing fast software and ease of use. Looks like this was my missing piece into automated trading world, which I'm starting to feel too. It's not I'm not the only one who has found that taking the step into automated trading really helps to iron out some of the misconceptions I had as a retail trader, as a manual trader, and has made me better. And even though I take these degenerate bets all the time, every week I get better and better than I was before. And that's literally TradersPost is to thank for that. I wanted to. All right, so there's a couple of questions that popped up this week. We don't have a super huge roster, but I am excited for a couple of the things that we're going to be talking about at the end. But before we start with the questions, I do want to open the floor to John. Who, John, there are going to be a couple of new additions and features coming to TradersPost Life. Would you mind extrapolating that a little bit?
Yeah, for sure. So there's a bunch of settings that we have in the strategy subscription settings that we're working to make available via the Webhook JSON. So be able to control things like the order type, time in force, whether or not it's extended hours. Quantity type is another big one. So you can basically control the dynamic quantity calculation methods. So if you want to exit a percent of your position or buy with a percent of your portfolio equity, you'll be able to control that from the webhook, which will just make it more flexible so that you can have a strategy subscription with some default settings, but then you could override those settings from the webhook JSON. And then we'll also have the ability to control all the option chain scanning settings from the webhook. So if you want to buy calls that are in the money and it's 3 months out and the third strike away from at the money, you'll be able to control that configuration from the webhook. Or if you just want to send the exact contract that you want to trade, we'll use that contract and we won't scan the option chain. So just in general, like the goal of all this work is like we want to be able to control all of the features that are available within a strategy from the webhook JSON. And that'll allow people to build more robust strategies and have more explicit and granular control from their strategies.
And it's probably worth like a quick refresher too, that anytime you put rules like that in your webhook, they effectively supersede your strategy settings. Is that correct, John? Even in all of these cases here that you just outlined?
Yeah, and you have to opt into it as well. So by default, it will ignore the settings that are in the webhook. And the idea there is, imagine you're subscribing to someone else's strategy that has a bunch of settings in the webhook. But what if you want to override those settings? You could change those values in the strategy subscription settings and turn off the webhook settings. And that gives you the ability to customize the strategy, even though you don't have control over the strategy and the sending of the signal on the strategy side.
I find it be so exciting. I know I'm not the only one. There, as soon as you posted that inside of the group, there were other people were saying that they're really excited for some of these features. And I know we've been talking about internally this idea of being able to modify some or override some of the settings from the strategy within the JSON payload. Do you imagine that this is definitely a vector going down, that it's going to be expanding this type of functionality so that maybe potentially you control all of the different settings just from the JSON payload, or and that if you didn't want to use the backend interface, you didn't necessarily need to in order to set it up?
Yeah, I mean, I think that's kind of the path. I think that's like eventually where this will end up, is that like the strategy subscription settings could just be blank and all of the settings would come from the webhook. There's a little bit of history based on like the origin of TradersPost and kind of like where it grew up. And it grew up with people using indicators and strategies where they didn't have control over the JSON or like the control over the sending of the alert. And users needed the ability to control those settings on the backend side. But then there's a whole other cohort of customers who are like, well, I don't want to use the backend. I just want to control everything from the webhook. So we're trying to satisfy kind of both cohorts of users, so that the power users who want to control everything on the back end with the JSON, they can do it. But if someone wants to pick up a strategy off the shelf, like a Lux algo indicator or anything like that, they can do that, and they can plug it up to TradersPost, and they can control all of the settings for what to do when a signal is received on the TradersPost side without having to touch the source code or change anything about the strategy.
I love the idea of seeing just a suite of indicators and strategies that get created from people within the community that already integrates directly with TradersPost, and being able to have these types of JSON payloads automatically pre-populated inside of it would mean that some people can have develop tools that literally out of the box are compatible with TradersPost, and you're up and running within 5 to 10 minutes. Just activated some things on your chart and activated some things inside your account. I mean, that's the way it should be. I mean, that's exactly how I want it to be. And the way that you're describing it sort of feels like how I'm using AI now, where I use like the chat interface when I'm doing regular chat things. But then I want to be able to have locally run LMs that I can access using the command line interface tool. So depending on what I want to do, depending on how complex I want to do, depending on how many times I'm repeating the same sort of action, it makes sense to do some things in the back end of the dashboard and then other things inside of PineScript or whatever tool you're using. So that's great. I'm glad you're moving in that direction.
Yeah, it's going to be pretty sweet.
All right.
The expansion of some of the options tools are going to be pretty great as well. I think we mentioned this before on office hours. We're fairly confident TradingView is doing something with options in the coming future. So we're pretty excited that the tools we're integrating to manage your options contracts, specifically the contract name or symbol, as well as some of the rules around it in the webhook. I think that's going to make it to where within the first few weeks of something like that going live, you'll be able to set something up really fast.
Yeah, I think that this all, like you said, this opens up the doors for, like, we want to add other filters to the option chain scanning that we don't have yet. But there are a bunch of variables available that we could plug into it so that you could limit even further based on any of the Greeks or volume or the spread between the bid and the ask, like rejecting trades if the spread is too wide. That type of stuff I think will really be pretty powerful.
Yep. I think we're pretty excited internally to not only start tracking and providing access to the Greeks, but even doing a calculation on implied volatility. So that could be a potential filter as well.
Ray Kurzweil has has a saying that he said for many years, which is where he develops technologies and businesses for what the technology will be like in the future. Because he goes, well, if we know these capabilities will exist in the future, why not build a business that in 5 years, in 10 years will take off, or whatever time frame it is. The idea of as soon as we saw options being played with in the TradingView backend, or as soon as you see some of the features that John and Mike are adding to the system, it behooves you to start thinking about strategies and things that you might want to do in the future and prepare for that now, because it's not 5-10 years away. It's months away. And so there's like a huge benefit. I know for me, there's a huge benefit as a PineScript developer to start building some of these tools so that integrate with what you're talking about, so that when you guys roll out some of these features, I'm ready to deploy it, and then there's a whole market there to consume it. I know I'm just speaking about how I'm going to make a profit off of this, but just trying to show that there's all kinds of different ways of using TradersPost and all kinds of different use cases that are available.
Yeah, that's all right.
And the development,
and
internally in the development of TradersPost, we've already started preparing for the TradingView options. Like the other day, we were looking at the format of the options contract symbol that TradingView uses. And we added support for that format. So when they do eventually open up option support, when you send the TradingView option symbol to TradersPost, we'll be able to parse it and understand it.
Excellent. There was something that came up in one of our weekly meetings with this idea of stop loss. Does a stop loss target market price or ticks? Does this ring a bell? I just want to, Mike, if there's something you can say about that. I wasn't exactly sure what the question was.
This comes up a lot on futures contracts because oftentimes futures traders will manage their stop losses and take profits based on number of ticks that occur between price. Ticks are typically different per contract. Like for NQ, it's usually every 25 cents is a tick. So the confusion often occurs when they want to specify either a certain number of points or a number of ticks away from their entry as their stop loss or take profit. But TradersPost specifically manages take profit and stop losses off of the market price. So if NQ right now is 17,921, I'm going to want to take my stop loss and make it relative to the market price, not relative to the number of ticks or points that I want to manage my risk with.
And it's just to add to that, the broker and the exchanges underneath the hood, we actually send them a price. So in the future, we might be able to allow users to express their take profit or stop loss in ticks, and we would have to do the math on our side to convert that to a price to send it to the broker. The challenge, of course, is having the accurate tick size so that we can do that math and calculate it from the entry price. If they say, I want a 10 tick stop loss, we could do the math to convert that to a price based on their entry price and then send that price over to the broker.
Yep.
I know one of the annoying things I have to do with coding these strategies is that people want to set things based on ticks, pips, points, and percentages. Now I just have my function that I just used that wraps that all up. But even the definition for what pips are, or the consistency of ticks sometimes across different platforms, are not the same. So I can imagine how it can be a challenge to do that. You're someone regularly. I'll talk to people who will use ticks when they mean pips, and then all of a sudden you have a completely different stop loss or a system set up. So it can be confusing.
It can be. And ultimately, the one constant in all of this is that most of the brokers accept price, not any other denomination, if you will. So the best thing to do is just think about your stop loss and take profit in terms of market price.
Yeah. We also get asked a lot if people can do a take profit based on like the dollar profit. Like they can literally just say, like, once I've reached $50 in profit, get out of the trade. But it just, the brokers, the back end systems just don't operate that way. They operate off of the limit price compared to the current market price.
Well, that's why you got to hire somebody like me, and then I'll do all that calculation in the back end, and you can move on with your day.
Yeah.
All right. So this next question, I really like. It does come up a lot. This person's asking, does placing a stop loss order ahead of time open me up to stop loss hunting by large market players? This is a refrain I've heard again and again, where people say, I had one ask me just the other day, make sure that the script doesn't send an order ahead of time, because then the market will go, the market makers will go and make sure that stop loss gets hit before the price goes in the other direction, which I'm sure is a sort of like, the gods of Olympus are against me sort of thing, and they're waiting for my $200 order so that they can rob me. John, you have anything to say about this?
Yeah, I mean, like we were talking about this before the call, like you can get your stop loss hunted, but it's not because they're targeting you individually for your, $20,000 account. It's just because they know where the stop losses are likely to be, because everyone usually does the same things. We're all looking at the same charts. We're all looking at the same indicators, moving averages, and we all have the same data, and humans tend to make a lot of the same decisions.
It's very funny because it's this idea that I find it so interesting that retail traders will they have this boogeyman aspect to the market, and sometimes the boogeyman is the market itself, that the market is looking to hurt you and through some sort of destiny, some sort of god of Olympus sort of thing. And then the other part is that there's these institutional players, and all they're doing is raking in the cash by moving the chart in such a way as to make you make poor decisions. Now, that second part I could totally understand. There's a famous video from Jim Cramer, right, who talks about I don't know if you guys have ever seen it, where he talks about he would work in a hedge fund, try to move the futures in low volume pre-market in order to get people offside in order to steal their money. But then people extrapolate that into thinking that they're hunting specific orders, which I find to be very, very interesting. And that the idea that, because in the marketing space for years, we dealt with this. You can't predict what one individual will do, but you can predict what 10,000 people might do, and you could certainly predict what 100,000 people might do. And so there's like, the profit is in the large numbers, not in any individual case. So I thought we'd just bring that up because it is pretty funny.
Yeah, I was like, when people use the word they describe the market as they, like they dumped it or they pumped it, like it's some individual that's controlling the whole market. I mean, and one individual can, in a way, move the market, if they have enough money, but it's usually just the collective psychology of all the humans together that moves the market one way or another. And it's not like a single entity that's like making all the decisions about what direction the market goes.
Exactly. I think there are like instances. John and I were on a ski trip earlier this year, and I showed him the document Free Trader with Paul Tudor Jones. And there is a scene in it specifically, at the time he was running about $150 million fund, and they were trading the S&P stock index futures at the time. He would, if he was opening up a really large short, for example, just to throw the market the other direction, he would buy a bunch of contracts just so it would show up on the chart, and then immediately reverse his entire position from there. So there is that kind of stuff, but you need volume in order to do that. And like you guys have already mentioned a couple of times now, there's no individual that you can tell is on the dumb. the DOM is filled with everyone's aggregate orders. You don't know whose is whose. You don't know what sentiment is really there. A lot of those orders can get canceled. So I don't know that any individual is ever being targeted. John made the perfect point earlier. It's all about how people respond to price and those zones of consolidation and concentration in price. And people like to exploit that. I think oftentimes people set stops at very obvious places, right at the bottom of a candle, right below an indicator that everyone commonly uses. And if there's a lot of concentration there, well, then you're exposed to that concentration risk. Somebody somewhere might be trying to take advantage of that zone, either to fade into a position or fade out of a position.
In my manual trading, like I actually added some rules where like if I have like an obvious stop loss that's like an even number or something, I always will move it by, a couple pennies up or down, because the number of times that I got like stopped out like to the penny, it just happened all the time. I was like, well, I'm not going to let that happen. So whenever it just seems super obvious, I just kind of shift it a little bit, and that helps a lot.
It's funny, an artifact of a lot of these indicators' default values came from that type of shifting, where traders in the 1970s and 80s were trying to get a little bit of edge with their indicators against their competition, because they knew at the time everyone was kind of using the market calendar to create their indicators. So an RSI might have had a value of 15. Some people started moving it to 14 just to get a little bit of extra edge against the competition. So if you see the default values, if they always seem like an odd number or an even number instead of like the number of calendar days in a week or business days in a week, it's usually because of that type of movement, or not movement, but change that traders would make in the past.
I always feel like, let me know if you guys feel the same way. I always feel like when I see the default values on any indicator, on a popular indicator, I go, I might as well be sitting with my poker cards facing the other players. Like, I don't understand. Everyone knows now I'm looking at this number. Might as well just slightly change it, 21 to 20 or whatever, just to give yourself a little bit of a difference. But maybe that's me being paranoid.
Yeah, I think you need to use your indicators relative to your typical move. If you know, like, you're trading mean reversion and the number of bars that is typical for your move is, let's say, 100 bars or 120 bars, usually you want to create indicators around some fraction of that, either the half the number of bars or a quarter of the number of bars for your typical move. And the way you would know that is you would simulate 100 or so trades and basically just average out the number of bars of the move that you're usually in. That way it's more specific to your trading strategy rather than just some arbitrary number.
I don't know if you ever tried this, but a pro tip that I learned the hard way, just doing the opposite of what the indicators do, thinking that, oh, that's what the market makers are doing and that's what the institutional players are doing, is also not a strategy that works. So just putting that out there.
That's funny. It's like a rite of passage for every new trader. Is like, well, I'm terrible. Can I just like reverse? Like, I feel like every new trader asks. There's like 10 questions that every new trader asks, and that's one of them.
Yeah.
It's not working long, so I'll just go short, right?
All right. So next question, specifically about using TradersPost, is the idea of relative position sizing. So does relative position sizing consider my cash holdings or my available margin at the time of the trade?
So that uses your portfolio equity. So you can make it use margin if you just have a percentage that's greater than 100. But it is just your portfolio equity. So if you have a $100,000 account and you have $20,000 in open positions, you have $80,000 in cash, $100,000 in total equity. And if you say you want a position to use 10% of your total portfolio equity, then you would have $10,000 available to calculate the quantity from.
Excellent.
Meaning that if you want to use some of that margin, then you have to overshoot those percentages.
Correct.
Okay.
Sorry, go ahead.
I was just going to say, like, if I had 100,000 in cash and didn't have any positions open and I want to use 10% of my margin, then I would set it to 110%.
Correct. Yep.
And if that calculation, I've done it wrong, then the trade planning will just fail. Is that it?
Well, I mean, when you say wrong, in what sense? Like you don't have enough money to.
That's right.
Well, we don't verify on our side. We send the order to the broker, and they will respond whether or not you have the correct buying power for it. The rules for buying power and margin, all that stuff is different per broker, and we're not able to kind of duplicate that logic on our side so that we can do the same math that they do on their side. So we do the math and we make the calculation, we send the quantity to the broker, and they're either going to accept the order or reject it. If they reject it, the trade would get marked as failed, and you would see a message from the broker indicating why it failed. And in this case, it would say you don't have enough buying power.
Perfect.
And what I was going to add to that, something that Mike has asked for and customers have asked for, and we hope to add it in the future, is that say you wanted to use 10% of your portfolio equity, but you only have, $1,000 worth of cash. We thought about adding an option that would basically fall back to the amount of cash that's available if you don't have enough money for the full position size. Because right now it would just reject the order, but in the future we could enhance that logic and use your available cash to just get you a smaller position rather than just having the full order be rejected.
Perfect. And so to end the Q&A session, I thought it might be nice to have, I thought this was just a fun one. Are we allowed to post screenshots of our winning trades using TradersPost? I like to show people proof is in the pudding. Of course, head over to Discord, go into the Sharing is Caring group, and you'll have all the, what's the positive word for it? All the positive reinforcement.
Bragging rights.
There you go, bragging rights. That'll work. What doesn't work, I found, is DMing them privately and asking them what their strategy is and telling them I'll buy it. That's not a good idea. Don't do that.
I will say though, that I feel like every time I try to brag or share is when the market is like watching and is like, oh, this guy's getting cocky, and then it stops working. So I just try to be humble, don't brag too much, it's better that way.
It's true. I think it happens to the best of us out there. Your system is perfect. Everything's looking good. You up your leverage. You think you're on top of the world. Then you share it with everybody and it all falls apart.
You call your mom to brag about how much money you're making, and then it's over.
To me, I've heard it described that the market is an engine of pain, that what it's trying to do is the price needs to be a price that makes the buyer unhappy to sell and the seller unhappy to buy. That's what the price is finding, which to me seems right, because no matter what price anything is at on it, no matter what my position size is, I always feel terrible. And so I agree, the market is there in order to make me feel bad. That was a joke.
It certainly tests my pain. I'll give you that much. I have a pretty high pain tolerance, but if it pushes too far, then that's everybody's test of doing this, right? What's your risk tolerance or your pain tolerance? How far down can the price? How far down can your equity go before you start freaking out?
Well, my wife has been trying to get me to do Brazilian Jiu-Jitsu for the last several years, because she was doing it, and she says you'll learn so much about yourself through the pain, through the motion of your body, through dealing with other people. And I go, then you haven't traded in the markets, because there's no amount of pain that being punched in the face that's going to bring me. That's like losing 3 months worth of pay. That's not no punch in the faces cost that much, I'm sure.
I did jiu-jitsu for 7 or 8 years, and we did conditioning training a lot, where we would, hit each other's elbows and arms, and you'd kick each other's shins, like anything you could to try to bring calluses everywhere to your body. And the one thing I learned about myself is I don't like any of that. I quit because it was just too much after a while.
I already knew that about myself.
I was like, I can handle this. No, I cannot handle this. You get kicked in the shin 400 times, and you're just done at some point.
I love the idea of doing that, and then like paying your monthly fee at the gym. It's like, okay, great. What are you paying for? To get kicked in the shins? I'll do it for half price if you pay me.
Oh man.
Excellent. All right, so that's it for our questions for this week. As always, you can always post your questions on Discord, send us support tickets, post on Twitter. We'll find it and we'll ask it. We're always happy to make TradersPost the best automated trading platform for you and your trading needs. How However, the show's not over. We will be going over right now a new indicator that I'm pretty happy about that we've added to the TradersPost roster, which is about trend lines. Trend lines, folks. Everyone loves trend lines, but do you have a trend line script that is good for automated trading, that is set up to be able to use out of the box with TradersPost? No, you don't, and you're about to get it. So I think we'll say goodbye to John for now. And
see you guys. See you maybe
perfect.
next week.
Okay, cool, John.
Excellent.
See you.
Yeah.
Oops. Mike, I mean, I only got to show you the script a little bit before, but I'm actually pretty happy about it.
I'm pretty pumped. I'm done drawing trend lines. I'd like it to be automated, please.
Well, that's how I was feeling. I was like, I would lose out on a trade, and then I would find out that there was a trend line there that I didn't pay attention to, just because of time or whatever it is. And you can't draw all the trend lines. And so, as I was actually making the correlation script, which is coming out soon, but I wanted to have an example for the correlation script that was like clear cut, that really showed like good signals. I know we're not in the business of sending like buy and sell signals, but I think it sells something a little bit better if I can have good signals there. And then I realized it's going wrong because I don't have trend lines, and I go, well, how would I? Are there any trend line scripts in the community library that will allow me to go and trigger certain buys and sells based on them? No, I didn't find. I think I went through the top 8 trendline scripts, and none of them out of the box provided the features that I needed in order to do it.
Mhm.
So I set
Here
myself
it
to
is.
the task. That's right.
All right. Love it. Let's see it.
Okay, so beautiful Bitcoin chart, and so it's called simple trend lines. And what it does is it's essentially taken all the pivot points on the chart. We'll use this on Bitcoin, and it's what you're going to get out of the box is it's just showing you all the trend lines that haven't been broken yet, right? So it'll make sure that the trend lines that it hasn't the price hasn't broken it. That's what you're seeing on the chart. But you can have in the data window, you'll notice here that we have 6 fields, new pivots, either high and low, new trends, and trend breaks. And so when a trend does break, these guys will switch to 1. And so you're able to, if you wanted to, in fact, if we do this with Confluence Alerts, you're able to actually choose simple trend lines as one of the inputs, so that you can set alerts based on this, and you can set multiple conditions based on this, which I think is pretty cool. So that when you come into the alerts here, the create alert panel for TradingView, and you were to choose our script, you can go ahead and choose alerts specifically on that. So if you're waiting for, if you're, let's say you're in this Bitcoin strategy and you're waiting for the price to cross, this trend line, well, you don't have to specifically enter the price. You can say at the next break, I want to go ahead and place an order through TradersPost at my broker. In addition to that, you do have, there's a bunch of other settings here just for quality of life stuff. And so if you wanted to have set the different sources for your pivots, here we're using out of the box pivots that are waiting for 5 bars before and 5 bars after the price, but you can change that in order to get different settings. But what I like here is buffer. So you'll notice here around the trend levels, for example, here it's blue, and the script will count the number of times the price comes and revisits that area. Let's just go into a lower time frame just to see it more clearly. So let's say if the price were to come over here, for example, and touch into the zone, we have like little markers that's showing that the price is in that zone. And the reason why this is useful is that you can tell there's a sense of what the strength is for a trend based on how many times the price came on that trend or near that trend without breaking it. And so for a script like this, what we can do is set our setting to show the past trends. So I set past trends. It'll show me any trend that was previously broken that had, let's say, 15 touches to it. Let me zoom out so we can activate it. So over, just trying to get more trends here to show. Okay, so like over here, for example, now we have these new trends that are showing up, these dotted ones, and these are trends that were previously broken, but we can see here, we get an idea of their strength, that these trend lines had 10 or less touches. So you see over here how the price is clustering around these trend areas. And I found it super useful because when you are analyzing the chart and trying to discover new types of setups, these trends will show up. These trends later on might show up as trends that get revisited. And so you can, let me see if I could find a good example here. Let's go back further. So here we're seeing now trend lines that had 5 touches. And I found that when I'm looking over a chart to see where are areas of interest, where are zones of interest, that being able to see these past trends can be very helpful. So for example, over here at the price that we're at, this trend that was previously broken might end up being relevant in the future. So I like these tools that allow us to surface different patterns within a chart. I don't know what people will end up making out of this, but I suspect it could be pretty interesting.
I think so too. Yeah, I think there's some value here. Dialing in the settings, I think, is going to be a key part here, where you've decided which time frame gives you the a good sense of the trend overall. And then, of course, dialing in the number of touch points before you even consider it, but then deciding whether you're going to start trying to, short rejections of the trend, or if potentially there's a way to get a sense of a crossover and a pullback, and decide to buy that pullback. That could be an opportunity as well. Trendline trading can be pretty tough. I think it requires a lot of discretion, but to automate it, I think there are some rules that you could implement that could look for throwbacks and pullbacks that could help establish confirmation above or below that trend line before you enter a trade.
I found I've been using this for about 2 weeks now, and I found that there's 3 areas that it's helping me in. One, just as far as analyzing a chart is concerned, it can be useful. So this is a pattern I look for all the time, this sort of rate of change slowdown for the trend levels, to let me know, okay, despite whatever price action is happening, we are having a slowdown within the price, and it makes it more likely that we're going to head to the downside as it happened here. I think we even have it, if you're on the daily chart, you would have seen on at Bitcoin, you have this this rate of change slowdown once we got over here. And so at this pivot that we had in Bitcoin in early April, might have been a signal that, hey, there's downward pressure for the chart. But similarly down here, we have this rate of change increase for Bitcoin, right? So sometimes I would think to myself, maybe around here, all the price might fall, but it turns out no, it created a trend line that was faster than the previous one, or more acute than the previous one, and then it makes it more likely that that trend might be bullish. So I really like these sort of things. And then you get this. The second way I've been using it is for determining stop loss levels. And so it's very helpful to, let's say I'm in a trade in a particular level, anywhere. So let's say after here, this trend showed up when the second pivot point showed up. So I entered a trade over here. For example, let me just show you. I'm in replay mode. I enter a trade over here because that's where the trend shows up. 1 second. So I entered a trade over here, and then I have my stop loss level at this trend level. So I could set the alert of the crossing of any low trend as my exit for my position, and then I just write this up, and I can take profit at the next cross of a trend high, for example. So I find that particularly useful. And then for the third thing is the buffer levels. So let's say we were in NASDAQ, let's say. I found it interesting. Let's say I were to go. Let's go. Okay, so whenever I get these crosses, I use that as my end date for when I think whatever pattern is I'm in should resolve by. And so I found it very interesting that the instead of necessarily trading the channel, I can tell that one way or another there needs to be a resolution by, let's see here, this is what date? This is mid-May. Same thing happened in Bitcoin, which is what I was telling my group earlier today, that this pattern that we're having should resolve by mid-May, April 14th. And I didn't think it would be so useful, like that the crosses of the high and low trend does almost give me a timing aspect to it, but it seems to. So I could run a strategy and then set that strategy to end at that date, which we can do, let's say in Confluence Alerts, you can set it to that it's going to expire by a certain date if you wanted to play a channel or what have you. So I think it's pretty interesting.
Got it. I think,
And
yeah, I think this is a really good example too of sort of semi discretionary or semi automated, where some analysis will be required by the trader to analyze these trend lines, but then creating some structure to how your trade should execute in the coming weeks or coming months provides a lot of advantage here, where you can kind of just let the tool give you the guidance you need automatically without worrying too much about having to revise your trend lines all the time.
yeah, and you can really set it to like, don't show me, don't break any trends. I want to see all the trends, and then you get to see some really wild stuff where you're seeing where, hey, the price responded to this trend line 5 times. I didn't even realize that trend line was there. That's pretty cool.
Sure.
Just want to bring up here that if you want to go get the, we're gonna be dropping a video soon for the walkthrough. But then if you wanted to go get it today, you can. You can just head over to trendlines to traderspost.io/blog. Let me say that again. You can head over to traderspost.io/blog in order to get the script here. Just click on the link for Simple Trends, and you'll be able to get it from TradingView.
Cool. Nice work, Tom.
Now, one other thing I want to add, one of the reasons I wanted to do this script is that when I'm in Discord, I see people with problems with PineScript, and I really wanted to help provide more educational material of how to go about programming. If you wanted to delve into programming and how you can go about doing that, and so this version of the code, and I think I'm going to start doing this for all the new indicators, has every part of the documented for how to go about it, like why this is set up the way that it is, what this section does. I really wanted to have something here where if you're learning PineScript, either beginner or intermediate, you can use something like this and really get the breakdown, as opposed to having to go into existing scripts that exist and try to piece together why things are done the way that they are. So I really want people to go in, read it, and come out of it knowing, hey, I could build a script from scratch if I needed to, and I'd be able to copy certain functions if I needed to, because I know exactly how it works, exactly why it's set up the way that it is, and I'll be able to add it into my own projects.
Isn't that great when the code is easy to read and you can actually copy it and use it and make something useful from it?
That's exactly right.
Yeah, I appreciate that you did that, Tom.
Yeah. That video that's going to be dropping for the tutorial walkthrough for this is like an hour long. So forgive me, but I was like, I would want to see an hour video of someone like literally stepping through building this step by step. So that's what people are going to get. And if you don't like it, well, obviously go straight to the script or just use it for your own needs. Before we end, I do want to show one thing, just to get this on the record. So I did mention that we can use the script with Confluence of Alerts. So for example, if you were to use a script for Confluence and you were to use, let's say, so the script has a setting here where you can see the breaks. So let's say we show the breaks. And now I'm getting these markers that show me this is when the high trend is broken, and then the alternative, the teal one, is when the low, as potential opportunities to enter in and out of trades. What's cool is, let's say I'm using a popular script. Squeeze momentum is one that comes up a lot from this is squeeze momentum indicator by Lazy Bear. That some people use in order to filter out signals. So you can do that with Confluence of Alerts. You can set up that when the trend break high, for example, happens, and that value is greater than 0, so that means it'll be true. It'll fire. So we're seeing that right now, where the Confluence of Alerts signal is showing at the same locations as the other ones. I can go ahead and merge that with squeeze momentum and say and squeeze momentum also has its own plots on the right. So I can say when that number is higher than 0, then I know it's going to be green. And that way, I can, let me just remove some of these items. I can filter some of these results. So over here, this marker, that's right. So I want this when it's above 0. So here we have our marker for trend high, and we're in the green. Same here, same thing here. But it's filtering out any of the signals where it would have been the red. So as you can see over here, we're getting potentially good areas where, for Bitcoin, for example, would have been great places to place buy orders. So this is another reason why I think using the Confluence Alert script works very, very well, because you're often going to find yourself in situations where you want to filter out some of these bad signals or the time that you want to trade in, and you can do that. And we're building our indicators in order to have that sort of integration out of the box. All right, so that'll be it for that. Mike, I'm interested to see if you can what use you'll find out of using it. I want to see if it would pick up the trend lines that you would find interesting, because our trading sort of like overlaps in certain ways, but in other ways are completely different. And so when you give me those feedbacks, it really adds to like, okay, what kind of new features I want to add and how I want to expand it from there. So I'm sure this is going to be the sort of thing that you'll have feedback on.
I might throw a twist at you. I'm a much bigger fan of linear trend than the standard trend line, primarily because of the data that gets picked up in the linear trend tool, which is effectively a data sampling of the normal distribution of price over whatever selected range you have, right? And what I tend to do, and what works very well in some of my approach, is to use linear trend to confirm that a trend is strong in one direction or the other. I'll buy or sell on either side of that trend. And if we break the trend, that's a good indication of where to exit. I think you and I could work on something there to automate, and it would be similar to this approach. You could couple it with Confluence of Alerts. So maybe we should work on that as well. But I will definitely give a try to the trend lines. I'd like to investigate what we can do with linear trend too.
Well, we found that we'll often share back and forth like what we're seeing inside of the markets, and it's so fascinating to see a completely different set of analysis that you're doing that corresponds with the same sort of levels that I have, which makes me feel like there's a divineness to the markets.
I think the big part of it is we're all using different tools, which are all derivatives of price. So we're going to arrive at the same conclusion at some point anyway, right?
Right.
It's just whatever tool gives you the comfort of taking the trade and giving you the confidence to hang on to that trade for as long as possible. That's the tool for you then.
Perfect. All right, so that'll be it for this week. We're going to be back next week, I'm sure, with more scripts and more videos and more things to make your automated trader life that much better. Anything else you want to add, Mike?
I don't think so. Thanks again for covering the feedback we got this week. We love everything that people have to say about Traders Post, but if there's anything we can do to improve, anything we can add, we'd love to hear about it. Shoot us in the show notes or email us directly.
Excellent. Have a great weekend, folks.